Good evening, everybody. Thank you so much for joining us this evening. We got a great response to the last webinar, and that's why we followed up with this one. And we hope that you can make the most out of this session. We have had a lot of registrations for this one and highlighting the relevance and complexity of this topic. To give you an overview of this program, in the first 20 minutes, I will be talking about 5 tax mistakes to avoid when selling Indian properties. Then we have like 10 minutes of Q&A. We'll extend it, if there are a lot of questions. Please add your questions to the chat box and we will address them during the Q&A sessions at the end. At the outset, we have a disclaimer. This presentation should not be considered as advice. Please consult your tax agent or lawyers before proceeding further. We are sharing this information for everybody's benefit. Before I begin, I would like to give you a bit of a context by telling you about how nobilisnri taxation was formed way back in 2016. It started with my experience of repatriating funds out of India. Despite being a chartered accountant and a CPA with an international taxation background, I struggled to navigate through the maze of different tax rules in India to transfer funds. It was a stressful process and too complex, no set process, and no standard format. And I realized I had the skills and expertise to help others in a similar position to get the Indian tax rules. I also realized that the Indian CAs don't understand the US tax rules and the US accountants don't get the Indian tax rules. After 8 years of dedicated efforts from an amazing team in Bangalore, we are here today. Bangla is the director and head of operations in India. Pranthi is a chartered accountant and has many experience in PwC, having great insight into international taxation. Okay, to start off, for the following few slides, I'll be describing in detail the 5 tax mistakes to avoid while selling Indian properties and repatriating the funds to the US. As you may see, the ultimate objective is to bring funds from India to the US bank after selling the Indian property. So that's what we are focusing on here. The first one, should you disclose an Indian property sale in the US tax return? Let us also see who has to disclose, why do you need to disclose, and what needs to be disclosed. If you are a US tax resident, you need to disclose, and it needs to be disclosed for a simple reason that as per the US tax rules, is required to be. And I understand and empathize that many individuals may not include certain details due to the lack of clarity and the confusion surrounding them. In some areas, it is not entirely clear, but when it comes to disclosing this information, capital gains in your tax return, it is essential to adhere to the US tax law. It can be challenging to accept the fact that you have already paid taxes in India on this income and haven't brought those funds to US. However, US tax law is very clear on this matter. It must be included in your tax return. At our firm, we have been assisting our clients in fully disclosing this information and utilizing a various tax planning strategies to manage and meet the tax obligation. It provides a peace of mind, knowing that you're doing the right thing and avoiding penalties, especially if IRS eventually conducts a data matching based on the FATCA declaration. It's also required, there is a information sharing system between Indian Tax Office and IRS. And whatever you disclose it to the income tax department, which will automatically will be shared in IRS as well. Let us look at the second point, the financial year in India and US. The financial year in US starts from 1st of January to 31st of December, as you may know. But in India, the financial year starts from 1st of April to 31st of March. It is advisable not to sell a property in April to December because of the overlapping of financial years. And I can give you a small example here. Let us take an example that you have sold a property in April. Then you will have to wait 14 months, that is next June 2025, to lodge your Indian tax return and claim the refund. Before that, 31st of December, your financial year ends, and you need to disclose all this information in the US tax returns, and you will have a difficult time with claiming the dual tax exemption and also processing a refund in India. It's better to sell during January, February, based on our experience, and you get one more month, like a March, for compliances and other things. And if you are looking at selling a property, probably these are the best months to do it. And if it can be vary depending upon your circumstances, and try and repatriate the funds before 31st of March because of the new budgets, which there aren't much changes, but the rules and procedures changed drastically, and the full budget is expected somewhere in the month of June. So better to do the transactions before June full budget. The third most important point is not doing any US tax planning before the sale. As you are aware, such transactions can have a significant tax implication, both in India and US. I believe it is crucial for us to engage in a proactive tax planning before these sales occur to ensure you can maximize your savings. It's very helpful in the case of investment properties as well as inherited property. Tax planning is a powerful tool that can substantially reduce your tax liabilities in both the countries by strategizing ahead financially year end. And we can explore various lawful avenues to minimize the taxes you owe. This might include timing the sales, taking advantage of dual tax exemptions or deductions, and other strategies tailored to your unique situation. It's important to note that our option to optimize your tax position significantly diminishes once the financial year concludes. After the year end, our ability to influence the outcome of your tax liability is limited, and we will be primarily focusing on the compliances rather than the tax saving strategy. So if you have any kind of a transaction, reach out before 31st of March so that we can really help you with your options. Just to give an example, when you reinvest the funds in India, let us say 50 lakhs on the bonds, it does not attract a capital gain tax in India. And this option may be suggested to you by a chartered accountant in India who may not fully aware of the US tax rules. This tax exemption is not recognized in the US. And in our tax advice report, we consider your tax liabilities and cash flow requirements to suggest 4 different options to choose from to minimize the overall tax. We also consider visa conditions and rules, date of permanent residency, and the tax residency. date of purchase to apply tax minimization. The fourth important point is on the lower withholding of taxes. This is a very important point which you need to understand. There is a TDS of 20% on the sale price. Just to give an example, if a sale price is $100,000, then the TDS or a withholding tax is $20,000, irrespective of a capital gain or loss. Even if you make a loss on the sale of property, still the 20% is applicable. So essentially, you will get $80,000 in your hands. So how do we avoid this situation? Is by applying lower withholding of taxes, right? Which improves your chance of getting funds faster. If you have already given a deposit or you require the funds immediately, this is very helpful. And it usually takes 6 to 8 weeks to do this. And it's a good idea to get in touch with us well in advance for your planned sale. The fifth mistakes to avoid, which is a very common mistake, and the worst thing is that your funds is going to get stuck in the Indian bank account, right? That is the last thing which we want to do, right? So we are trying to avoid that part, and these are most basic things: NRO account, PAN, KYC to transfer funds to the US. Let us touch upon each point. The PAN card, for that matter. A lot of NRIs PAN got deactivated recently. Now you need to reactivate the PAN, or you just verify whether your PAN is active and you have updated all the information. Also make sure that the PAN is a non-resident PAN, not a resident PAN. And the second most important point is an NRO bank account. We as a non-resident Indians, we can't hold a savings bank account, and which is only for the residents of India. And under the foreign exchange management rules, we need to have an NRO account. You don't have to have an NRE account, and NRO account is perfectly all right. You can transfer funds from NRO accounts to your US. And there are penalties applicable for holding a savings bank account, which is linked to your PAN and which is linked to your repatriation. So there is absolutely no way you can hold a savings bank account as of now. Then the third one is the KYC, is know your customers' documentation. Just upload all your documents to a bank and make your bank account ready to repatriate the fund. These are simple things which our clients are facing with the banks, because the funds gets deposited into your NRO account and the KYC is not ready, then the bank is not ready to repatriate your funds. The other important point which I want to share it with you is about the previous ITRs. Log into your income tax department website and check whether the PAN is active, check whether the KYC is active and PAN is correctly mentioned as an NRI, and check is there any notices or demands in your file. So lodging your previous ITR will help you to process these capital gains planning much faster. So you don't have to file your ITR if your income is below the threshold limit. However, if you have been receiving the rental income, if you are receiving interest income, so please lodge your tax return. Just because the bank is doing a withholding of taxes on your interest income doesn't mean that you don't have to file your tax return. You have to lodge your tax return. The other important point, which I thought I should share it with you, is about Aadhaars or NRIs. You know, up recently, the Aadhaar is not a mandatory for NRIs. Now the government has released that option. NRIs can also have Aadhaar. It is better to link your Aadhaar with the PAN, and it is not compulsory for us, but you can good to have, right? So so that the Aadhaar makes it easy for you to transfer the fund, and the right hand is talking to the left hand in terms of PAN, bank, and Aadhaar. Everything is linked together. As we discussed earlier, you need to have an NRO account. You don't need to have an NRE account, but it's still good to have an NRO account and NRE account. Make sure you have a relationship manager if you are planning to repatriate the funds. If that is not the case, then reach out to us. We will be happy to connect to one of our bank's relationship manager, and they will be helping you to repatriate the funds much faster. And I get asked more frequently that how much you can transfer, right? So you can literally transfer 1 million USD per financial year, and most of our funds property comes within this bracket, and it's a less paperwork and very much more better clear process, and you can transfer up to 1 million USD per financial year. Two, when your funds hits an NRO account, the funds the seller can't give it to you any other way other than depositing to the NRO account, and you need to have 15 CA, 15 CB certificate from chartered accountant. So sale proceeds are transferred to NRO account. Approach us, and we will verify the documents and make sure that you are compliant, you've paid all your taxes, and your funds are good to go and leave India. So that is exactly the 15CB meant for. File the form A2 given by the banker. This is where the relationship manager plays a really good role. Upload the form 15CB online and fill the form 15CA online. Provide all three forms to the bankers in 2 copies, right? The bankers will independently verify everything and whatever the documents we have given, and they will make sure that it is compliant. And when they will transfer the funds to your NRE account or your foreign account directly. I have compiled the whole webinar presentations into a small to-do list. This is a takeaway from the webinar, making it easy for you to have a following steps so that you are ready to sell your property and repatriate the funds. As we discussed earlier, convert the savings bank account into an NRO account. Update the address in your PAN, make it look like it is a NRI PAN, not a resident PAN, and IT portal to reflect your non-residential status. Log into your income tax portals and check for tax notices and demands. This is where you may not have done anything. You may not have logged into your income tax portal. When we log into the income tax portal, we often see the old demands are pending there, and the income tax department regularly sends tax notices to NRIs these days. It's another hassle, and we help to clear the tax notices and making it ready so that when there is no problem from the income tax portal point of view, and you're good to go from there. Lodge your tax returns in India within the due date. Disclose income earned in India, even though there is a withholding tax done by the banks or any other authorities. Make an advance payment of taxes if there is a shortfall in taxes owed, and you should link your PAN and Aadhaar if you have one, or you consider Aadhaar for NRIs, which is a very new release by the government of India. Compare taxes paid under the new tax regime to the old tax regime. Find out what is good for you and strategize it accordingly. At last, the happy moment is here. Your funds have landed in your US bank account. That is exactly we wanted to achieve, making it easy for you to sell the property, pay the taxes, take your funds, and you know what you need to do. So at the end of the presentation, we offer an advisory services to maximize your tax benefits, assist clients in a challenging situation in India and abroad. Additionally, we have a network of professionals who can help you with an Indian property purchases or assist in selling and repatriating funds to your US bank account. You will get a high quality advice from us on time every time. And we also have a network within our client base who are looking to buy Indian properties. And if you are looking for a buyer for your Indian property, we can certainly assist you with that. Alternatively, if you have already found a buyer, we can help you with the sale and repatriation process. Best to reach out to us at least 8 weeks before the planned sale or before 31st of March. All our partners have a good understanding of the requirement of US citizens or a permanent resident selling a properties in India. Those are totally different from Indian selling a property, that the Indian chartered accountants often give an advice based on the Indian selling a property, and tax planning could be beneficial for Indian resident and Indian citizens, but may not be as beneficial for US citizens and residents. You will be in safe hands. Our vision is to offer a one-stop solutions to sell your Indian property and transfer funds. We offer peace of mind with lot of hand-holding from our Indian team and value for service. This will reduce the uncertainty in this process, and your funds are likely to come to your US bank account. Thank you very much for joining our webinar, and please drop a comment in the chat box. I'll be happy to answer your question. And my team will reach out to you with a webinar recording, and you can book a 15 minutes of free discussions with Mangala, our head of operations, and she will be happy to assist you and take it to the next level. Or you can visit our website and apply under the contacts. Thank you very much once again.